Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, March 28th, and we got pretty much today will be almost the last day in market terms. I'll do another report because there are some economic news releases scheduled for tomorrow, even though the market's closed in observance of Good Friday. And then obviously I'll be on vacation next week, so I won't be doing any reports next week. So, anyways, we do got some important economic news releases, but we do have the week. We'll start off with the weekly jobless claims. We had 341,000 people applying for unemployment last week, and we figured it'd be about 339,000 for this week because we'd be kind of hovering between the 330 340 range, and it jumped up to 357,000. So obviously not good numbers. It'll be kind of something we'll have to watch here if it's a one-time event or if this is going to be a new trend where we start receiving more jobless claims. We got the all-important one this week is the GDP revision. This is the final revision for the fourth quarter, and we had a 0.1% growth for the last revision last month, and we figured it'd go up to about 0.6, and it came in at 0.4. So headline looks better, but not as high as forecast, and we need much greater than that to actually start creating more jobs and improving the economy. Then we also have the Chicago PMI, which is the manufacturing sector in the Chicago region for the month of March. We had a 56.8 reading, so anything above 50 is considered expansion, anything below is considered contraction. And we figured it would just temper down a little bit or about the same for the month of March, and it actually dropped down to 52.4. So not the greatest of numbers this week. The GDP is probably looking the most promising, but not still even that great. Tomorrow we do have the consumer sentiment. It's one of the items we'll have, so it'll be kind of important to see what people are feeling towards the economy. So let's jump over the headline news. And currently the stock market's up. They're mostly looking at the GDP numbers and kind of going, but it's not going great. It's just, Dow's up maybe about 50 so far this morning. And then also we have the Cyprus and Italy. Today, Cyprus opened the banks for the first time in about 2 weeks, and we got long lines of people trying to pull money out. They're putting very restrictive guidelines because the concern is that maybe they'll run out of money by people just taking a big run, so they're putting limits on them. So they're limiting them to about 300 euros per day, which translates about $400 per day that they could pull out. So that's one of the things. There's also concerns, obviously, in the rest of Europe that maybe people are going to lose confidence in the European community and the banks in the European community, and maybe have a run in other places in Europe as well. So that could create a little bit of a stir. Italy, there's still the uncertainty with the government as to any clear cut who's going to control the Senate, the Parliament. So there's still that uncertainty. Their yield spreads on their bonds are still down. It's not into that territory where you have to worry about bailouts, but it's something definitely to keep an eye on, especially when a lot of the people are running on platforms of anti-austerity. And the reason why they went to austerity is because they're getting to a point where they're going to default on those. The yields were getting too high and they're going to default. So let's check out the bond market, see what's going on today. And today we have a little slow here. Sorry about that. We're pretty much in an even pattern here. So we're about 3 basis points from where we left off yesterday. We did touch the ceiling yesterday and pulled back. So that's starting to look like pretty strong sector there. So we need to be cautious in this arena here. But we did close up above the previous floor, which was right along here. And remember, I was saying that these were getting kind of tight, and this could actually push us downwards. So with the strength here, we could be seeing a nice little turn here for the better. This could be something to definitely watch for. Is this going to be us being able to have a turn of events where we start seeing the correction in the market that we've been kind of waiting for a while? Is the European concern going to be what's going to drive those, as we've experienced in the past, where once we start looking at Europe and get concerned, investors are getting concerned. The stock market's kind of tanked and helped out the bond market, which helped our interest rates. Because if you look at here, we've been having this downward trend going downwards, but now we're starting to see a trend where maybe potentially going upwards right now. So this is going to be something to watch for, that maybe we might see that correction we've been waiting for. But it's a little too early to kind of determine that as of yet. All right, so there's no change in the interest rates. We're still about the same where we left off yesterday, even though we had a nice improvement, as you see, with the upward opening. So a nice little move there. All right, folks, you guys have a wonderful day. We'll see you guys tomorrow. It'll be very brief as we don't have a whole lot of news going on tomorrow. And as I mentioned, this market's closed. So we'll just touch on the tomorrow. We'll basically just touch on uh, the the event for the news releases for tomorrow. All right, folks, have a wonderful day.